Recording and officially go ahead and let's get the call kicked off, guys. Joe Johnson and Jimmy Hernandez here, uh, coming at you live. This is a live webinar on Friday. This is our agency webinar that we do every single Friday. And like I was just mentioning before, we're going to continue with our series on mortgage protection. Today, we're going to be covering the 8-step in-home presentation. I've had a lot of agents this week asking me about a presentation. And basically, what you're going to see is that doing mortgage protection and final expense, there really isn't a big difference. You need to change up the wording a little bit, but the concept is really the same. So if you've already been selling with us and you've got a good understanding of how the final expense presentation works, transitioning and reformatting that into a mortgage protection presentation is going to be very, very, very simple. But before we actually dive into the presentation, I just want to go over again, re-emphasize the importance of getting the FEX toolkit, the quoting software toolkit, guys. I just can't tell you how great this tool is. I've been using it a lot. We've got more and more agents that are getting signed up for it. I'm getting tons of success stories about how it's working, how agents are using it in the home. If you've missed it before, I'm just going to do like a 20-second recap on how easy it is to use the FEX toolkit. Once you get logged in, it's this is the home screen to do the quotes. On the left, you see here, all you got to do is put in your client's information. Face amount really doesn't even matter. You're just looking for the right carrier. You put in the basic information, if it's a male, your state, the date of birth, the height, the weight, whether or not they use tobacco. And then see here over on the right, we're going to put in if they have any health conditions. So you can very quickly see I put in a client, they have diabetes with no complications. They have mild asthma with an inhaler I put in there. They take medication to control high blood pressure, and they had a heart attack back in February 11th, 2018. All you got to do is click get a quote. That's going to bring your carriers up, and it's going to rank them from the lowest price to the highest price. So in this particular situation, Mutual of Omaha came up number 1. You can see they're all very competitive. They're all within $2 or $3 of each other. But I like working with Mutual of Omaha. I think it's a great carrier. So in this situation, I'm going to go with Mutual of Omaha. All I'm going to do from here is click over where you see it says compare, that yellow box in the upper right hand corner that says compare. I'm going to click on that. I'm going to put in 3 different face amounts. In this scenario, I'm going to put in 40,000. I put in 25,000. I put in 15,000, and I've got my quotes. Once I've closed the client, I'm simply going to click on e-application, and that's going to take me to the portal. So in the case of Mutual of Omaha, they use iPipeline, so that's going to reroute me to iPipeline, and I'm going to start a new case. I mean, this is honestly how simple it is. All I can say, if you haven't requested, if you're not using it, you're really missing out. And for $114 for the year, it's well worth it, especially based on all the success stories I've been getting from the agents that have been using it. So with that, like I said, today's topic is going to be the in-home presentation on mortgage protection. If you're going to work mortgage protection, you're probably going to need some leads. I've had a lot of agents this week that have reached out and have purchased a lot of the mortgage protection B leads. We're getting a lot of good success on these. We do have a new category, however. Our vendor is now able to offer what they call senior mortgage protection leads. So if you see on the far right-hand side, it says senior 75 plus. What this is, it's a standard direct mail mortgage protection lead, but the client that it was mailed to is 75 or older. most mortgage protection agents don't want to work leads with older clients. They're just not capable. They're not prepared to be able to do that. These are fresher leads. These are the same age category as the $5 leads. They're 3 to 9 months old. So they're on the newer side, just the clients are a little bit older. So they're fresh leads. You can get those for $3. Those would be great leads to work. Honestly, you just have to work on the technique a little bit on how to sell insurance to older folks. I know we had an agent out in Dallas that bought some of these. I was looking at them. They look really, really good. Here's the funny thing, Jimmy, is that these leads, these Senior Plus leads, you would think that a lot of the mortgages would be like smaller mortgages. It was like the opposite. I think the average mortgage that I saw on the form was like 300,000. I mean, they were like big mortgages, which tells me if you got someone who's 75 years old and has a $300,000 mortgage, I don't know about you, but that tells me they got some money. Because most 75-year-olds aren't taken out or couldn't even qualify for a $300,000 mortgage. That's a really, really good opportunity, maybe even for an annuity. Maybe you got to do, maybe it's not final expense. Maybe you write them a fully underwritten or a term product. We have simplified issue term products that go all the way up to age 80. So just a really good opportunity to kind of add in to what you're currently doing. Here's just a quick sample of the leads. I think you guys have seen this before. So on the left is a sample of what the internet lead would look like. On the right is a sample of what your prototypical mortgage protection type lead. And then Jimmy, at any time, if you feel like you need to add in or interrupt, please do, okay?
Sure thing.
Awesome. Okay, guys, we're gonna hop into to now what we refer to as the 8-step mortgage protection. It's very similar to the final expense. It's just broken down a little bit differently. We're still going to do the bond and rapport. Now we're going to do the why, but we're going to be asking 3 different reasons. We're still going to do the upfront contract. We're going to do the pre-sale folder. But what we've added into the pre-sale folder is doing a needs analysis forms, which we typically don't really do on a final expense client. And then the rest is pretty much the same. We're going to do the application, health questions, 3-option close. We're going to complete the application. We're going to get our referrals, do the cool down and the pushback. If you're watching this on YouTube right now, this is a replay, and you're interested in getting more information, please contact me. Also, definitely subscribe to our channel. We put out brand new content every single week. If you want to get a copy of the in-home presentation, contact me directly. I'll make sure that you get it. Obviously, everybody on this call today, we're getting this call recorded, and I will hopefully later today, I'll send that out to you via text message with a copy of the YouTube recording. Plus, I'll also embed a PDF file, a URL link that will have the in-home presentation attached to it. All right, let's get going. All right, here is the outline. With mortgage protection, even if you're going to be doing an e-application, I highly recommend that you take paper applications with you. A couple of reasons why. One is that you never know when the internet's going to fail, or you can't get a phone signal, or something crazy happens. You always want to be totally prepared for any type of situation. So when I'm going out running mortgage protection, I'm usually thinking about 3 carriers. I'm thinking about Mutual of Omaha typically, Americo, and American Amical. Those are kind of my 3 go-to carriers. The reason why I like those 3 carriers is that they all three offer a really good return of premium program, which if you're offering mortgage protection, it's a great thing to have, is to be able to offer clients a return of premium. Also, I'm going to have my tablet or my laptop typically, like I said, especially if I'm going to be doing an e-application. I'm also going to have my ID badge, my flip chart, just in case maybe I got to transition into do a final expense application. Maybe the people really don't want mortgage protection, or they can't qualify. They were really more interested in a final expense app. Make sure you've got all the regular tools with you. As far as the bond and rapport goes, I'm not going to spend a lot of time on this, but all I can tell you is just, get to know your clients a little bit. And the easiest way to do that is just to ask questions. Ask them how long they've lived in the area, what type of work did they do, how many kids do they have, do they have any grandchildren, that sort of thing. Be observant, look around the room, look for pictures or trophies or knickknacks, or if you're into gardening. I know, Jimmy, you're into gardening. Jimmy always takes notice of maybe some plants or some, as he's walking in, hey, I noticed you got some really nice flowers out there, or trees, or whatever may be. Find something to get. What you're looking to do is get a little bit of common ground. Okay. I typically don't spend a lot of time on the bond and rapport, a few minutes. I usually, get into the business part of the meeting pretty quick. The most important thing I can tell you is just be yourself. Don't be fake. Don't be phony. Be real. Be cordial. Be polite. People like doing business with polite people. But I'm also not going to beat around the bush. I want to get, I want to get to the point. I also want to be polite to the fact that I'm not wasting a lot of their time. I'm going to be respectful as far as their time. Jimmy, anything to add on bond and rapport before we move on? I know you always have some good tips on that.
I know, like you said, I always try to find some sort of common ground to have a conversation on. I know a lot of names and about plants and stuff, but sometimes it might be something else, like maybe they have a collection of Betty Boop items, or a collection of Elvis, or whatever, right? If you can relate to it and make that connection, maybe it's giraffe figurines, I don't know, right? But the other thing too is you can just simply compliment people. You can compliment them on a well decorated home, or a very clean and tidy home. I can tell you this: if somebody's home is very clean and very tidy, man, that compliment right there will go a long ways, because they're proud of it. It takes a lot of effort to keep their house clean. So I mean, like, sometimes they'll go on a little rant about how much they clean, right? So just look for something that you can compliment them on, or have some sort of common ground. Just remember, it's about them, so let them do most of the talking. You may just make a small mention or story about yourself that's not long or detailed. Like, you just want to create that common ground, but it's not about you and your experiences, it's about them. So that's really about the only tip I have.
Absolutely, man. Let them tell their story. Transitioning into part two, we want to transition into and talk about the why a little bit. What is the why? The why is trying to identify why they requested the information. Why do they want information on mortgage protection or life insurance? And my transitional phrase is just something like this. If I'm meeting with Jimmy and Ruby, hey guys, I'm really enjoying to get to know you guys. I'm sure you don't want me here all day though. So let me just take a minute and let's talk about why I'm here. I'm going to have the lead card with me, whether it's a direct mail card that's handwritten, or it's a digital lead. I don't know. I'm going to have the card there and I'm going to just verify some information. Hey, Jimmy and Ruby, let me just verify some information I already have about you. Go over the card a little bit, get them to verify the information that's on the card. And then I'm simply going to say something like this, Jimmy and Ruby, guys, I've been doing this for quite a while now. And most of the people I meet with tell me the reason they filled out this form is usually for one of three reasons. One is they just want to make sure that their final expenses are covered, meaning when they do pass away, they just want to make sure that they're not leaving their family with a financial burden for funeral costs. Two is they're looking for some type of income replacement, especially if you're still working. You want to make sure is that, God forbid, you pass away, or maybe you get sick and you have a critical or chronic illness that prevents you from being able to work anymore, that you still have a stream of income that's coming in to help pay for the household expenses. And lastly is to make sure that the mortgage is covered. Again, God forbid if you were to pass away or get really, really sick, mortgage protection can provide your family either with a lump sum of money or maybe even a stream of income to make sure that the mortgage payment is made. And I know you guys have worked really, really hard to get a house and to maintain a house. But you tell me which of these three was your main concern. And I'm going to let Jimmy and his wife answer the question. I want to know. So Jimmy, in this situation, I'm going to ask you, Jimmy, you tell me which of these was your main concern.
Well, my main concern is that if one of us were to pass away, the other one wouldn't have the burden. So I'm going to say that's probably going to be the first one there, Joe.
The final expenses?
Mm-hmm.
Perfect. So you're identifying why you're there. This will help you later in your presentation identify what type of presentation are you going to be doing. And if you have a husband and wife, you really want to make sure that they both chime in. So and you want to direct the question to both of them. Here's one thing I can tell you: mortgage protection. You definitely want to have the conversation geared more towards the wife than the husband. Okay. I'm just telling you, man, do not neglect talking to the wife. That's going to be super, super important. So if I'm dealing with a husband and wife, I may phrase it like, hey guys, you tell me which of these is most important for you. If Jimmy speaks up, I'm going to go back to the wife and say, hey Mary, which of these is most important to you? She may say, well, I want to make sure the mortgage is covered, So just make sure that you're getting both of your clients involved. So moving on, we've identified what the reason why they sent the form in. Now I want to do the upfront contract. Guys, this is very, very similar to about exactly what we do verbatim as far as the final expense. So Jimmy tells me it's about this. I'm going to say, Bob and Mary, or in this case, Jimmy and Ruby, out of curiosity, do you guys know how these state regulated plans work?
No, not at all.
He's going to say no. Everybody says no because they don't know how they work. So all you're going to do is explain. This is called the upfront contract. Why do we do this? Because what we want to do, the purpose of doing an upfront contract and the full disclosure is to lay out with our clients exactly the way the presentation is going to go down. Because what I'm looking for here is I'm looking for any type of objections that would keep Jimmy and his wife from doing business or putting in an application today. Because what I have found is that it's a lot easier to uncover objections and overcome objections in the very beginning than waiting to the very end. Then they come up with some, crazy objection. Okay. So Jimmy, let me explain how it works. I'm a state licensed field underwriter, and it's just my job today to help get you qualified for the best program available. I'm just required to ask you and Ruby a few health questions and review your medical history, and this will help me understand what program is going to be the best fit for your unique situation. And it's important, Jimmy, I want you guys to know it's important for you to know is that I don't work for an insurance company. We're actually a state licensed brokerage that works with many of the top rated insurance companies across the country. And this gives us the ability to shop around to ensure that we're getting you the best value with the program with the lowest cost. And then once I know a little bit more about your health and what you're eligible for, I'm simply going to lay out and I'm going to show you what most people are doing in your same situation. And Jimmy and Ruby, if we can find a program that fits your needs, but more importantly, it's got to fit your budget, I'll simply send in a request for coverage and I'll get an answer back within 3 to 5 business days whether or not you're approved. Does that sound fair enough?
Sure.
I'm looking for the buy-in. So, I mean, I pretty much just, explain the whole process of how it works. They say yes, they're buying in. Then we're going to move on. And again, we're looking for objections here. I'm looking for Jimmy to give me an objection. And maybe, well, that sounds good, Joe, but we're not doing anything today. Jimmy, I know, I understand. Let me explain. We can't get the cart before the horse. Jimmy, even if you wanted to buy insurance today, I can't sell it to you. This is simply just the application process. My job is just try to get you pre-approved, okay? So we
Yeah.
took away that I'm not doing anything, or I want to think about it. Overcome that objection. Understand, you get all these objections out of the way up front. It will make your life so much easier on the back end. Now, pre-sale folder. We want to use the exact same process as that we do pretty much for the final expense. The only difference is that we're going to incorporate the needs analysis forms, which we typically are not using in a final expense application or final expense presentation. You could if you want to, it wouldn't be a bad idea. But my simple transitional phrase to go into the pre-sale folder would be, hey, before I ask you all the health questions and go over all the programs, let me start with something free. I put together this special folder for you. I'm going to have the folder in front of me. I'm going to start going through it, and then I'm going to ask the question. I'm going to say, this. I put this folder together for you. It's got a ton of very valuable information that's going to help you pre-plan for the inevitable. And I know no one wants to think about their death, but here's what I can tell you guys: planning ahead will not only save your family a ton of money, it's also going to help relieve the emotional stress at the worst possible time. And I'm going to simply start going through. I may ask Jimmy, out of curiosity, Jimmy, have you and Ruby, have you guys done any pre-planning? Go ahead and go through all the same forms that you have. What is the cost of a funeral today? Because even if your client is really looking for mortgage protection, they got to keep in mind, if they pass away prematurely, that there's going to be some type of funeral and it's going to cost 10 to 15,000. And here's what I have noticed is that the younger the person is, the more expensive the funeral is. Okay? And typically the reason why is because it's usually something unexpected. Okay? You have someone in their 30s or 40s that's pretty young, working a good job and that sort of thing, and they get cancer and pass away or die tragically in a car accident or whatever it is. Those are usually some pretty big turnouts because there's a ton of family, there's children involved. That's a big deal. I've seen funerals like that cost as much as 20 grand. Okay, as people get older and death is more expected, someone in their late 70s or 80s, first of all, most of their friends have passed away. There's sometimes more limited family. They've lived a full life. It was time for them to go. When someone is cut down and dies in their prime, that's usually in most cases when you see that the funeral is a much bigger deal. Okay, so just keep that in mind, that out of the mortgage protection proceeds is that we're also going to have the cost of cost of a funeral as well. So just do a really good job, and we've got some training, some video training on how to do the pre-sale folder, but just make sure you do a really good job of doing the pre-sale folder. And then one of the things that I do, Jimmy, as I'm going through the pre-sale folder, I go through the memorial guide. How I transition into the needs analysis is just simply saying, you know, Jimmy, as part of my job as being a state licensed agent is to make sure that you even need a program like this. So that's when we start asking the questions. Let me move to the next slide. Anything you want to add, Jimmy, on this before I transition into the needs analysis?
No, I think you're doing a great job, Joe.
Okay, just make sure, guys, you don't skip any steps. These are important to go through all the, you know, all the forms, all the pre-sale folder items that we have, including the estimated funeral cost. You know, that form from Social Security that shows what the estimated funeral cost. So as again, family needs analysis. The family needs analysis is especially important as part of the in-home presentation. Here's a sample transition phrase to move into the needs analysis. It says, Bob and Mary, as I stated, as a state licensed agent, part of my job is to find out if you would even need a mortgage protection plan. I'm just going to ask you a few questions to find out if this is something you would even need. And then this is a copy of the form. So as you can see here, and this is something new, I think I've already sent it to everybody. We did make a couple of revisions on it. So later today, when I send out the presentation, the video, I'm going to include, as part of the in-home presentation, I'm going to include this form as well, so you have it. So basically what you're doing here is you're just identifying who's the primary mortgage holder. You know, Bob and Mary, which of you is the primary mortgage holder? Okay, great. You list their information and you go through and you're collecting this information. I'm going to ask Jimmy, if you wouldn't mind just role play with me on this
Sure.
Mortgage information. Jimmy, approximately what is your current mortgage now?
Oh, we owe about $250.
Okay, so I'm going to write 250. And then, Jimmy, what was the original mortgage term? Was it 15, 20, 30-year mortgage?
30 years.
30 years. I'm going to mark in 30. And Jimmy, approximately how many years do you have left?
20.
All right, so he's 10 years into it. And then, Jimmy, what's your mortgage payment?
Oh, about 2,000.
Okay. And then does that include are your taxes escrowed in?
Yes.
Okay. So I'm going to write down, I need to know how much the mortgage payment is. That's important. And Jimmy, what would you estimate? What is your home's value?
Oh, probably about 350.
350. So how much equity do you think you have?
About 100,000.
Okay. So guys, these things are important. Jimmy and his wife have worked hard to keep their house. Certainly they would never want to, if they can't make the mortgage payment in the event of a death, they don't want to lose $100,000 worth of equity, right?
Correct.
Employment information. I'm going to go through, find out if Jimmy's currently working. Jimmy, who's your current? If it's a younger person, I'm just going to naturally assume that Jimmy's working. Jimmy, who's your current employer?
Senior Solutions.
Okay, and I'm gonna toggle back and forth. Ruby, who's yours? I'm gonna go back and forth. Previous employment. I'm gonna find out what their net monthly income is. Do they have any additional income? Maybe rental property. Maybe they have an investment portfolio that pays them an income. And then we also, if they're on Social Security, I'm going to include their Social Security. Or I might ask, Jimmy, out of curiosity, do you know at age 65, do you by chance, do you know what your Social Security benefit will be from the government?
I don't know, Joe.
Okay, he doesn't know. I'm not going to fill that in. But it's kind of a good question to ask, because if someone's working and they pass away, you may want to structure something where you're doing like an income replacement to make up the difference between what Social Security will pay and what their current income. It's just good information to have as you're going with your presentation. And then lastly, I want to know.
Can I pop something in there real quick?
Yeah, please do.
So don't skip this step, what Joe's talking about, because this can help you close a sale if the amount, the death benefit, the face amount that they are thinking that they need and what they can afford is a lot less. Because you can come back and you can justify and say, hey, well, based on all this information, you really don't need to pay off your mortgage. What we're trying to do is protect the home, from going into foreclosure or making a bad decision. So, it's really important that you do this. But go ahead, Joe.
And then lastly, we're looking to see if the client has any existing life insurance or what we refer to as beneficiary designated accounts. Okay. So, and that's how I'm going to phrase it. I'm going to ask Jimmy and his wife if they currently have life insurance through their work, how much they have. Do they have private life insurance? And then savings, 401k, brokerage account, or any type of other account. One way you can kind of describe this is with the beneficiary designated account. If you were to ask the normal person, Jimmy, out of curiosity, do you and your wife, do you guys currently have any beneficiary designated accounts? The average person's not going to know what the heck you're talking about. You can simply describe to them, well, Jimmy, a beneficiary designated account is any type of account where you would name a beneficiary. As an example, life insurance, whether it be through your work or private. Even when you go to the bank and set up a savings account or a checking account, they always ask you, who would you want to name as your beneficiary, your 401k through your work or brokerage account? Because what happens, Jimmy, is that if you had a 401k through your work and you're using that as a savings vehicle, if you were to pass away, it's going to change from a savings vehicle to a death. How would I phrase that?
Like a distribution or a benefit.
Yeah, a death benefit. It's gonna change to a death benefit. So that would be a beneficiary designated account. And then again, then you can go in and just it gives you that little bit of credibility, I guess, of why you're getting nosy into their life insurance and their savings, because at the end of the day, what we're trying to do, we're trying to identify whether they need this program or not and how much they need. More than likely, what you're going to find out is that they really need it, because most people are severely uninsured, and most of them don't have a lot of money in savings. Okay, and if they do have a 401k, it's probably not a good idea to take their 401k and pay off a house. Okay, that's the important part of having mortgage protection. So that's part 4, where we have continued with the needs analysis. From here, it's really important. What I like to do is directly from asking, since we're in like question asking mode, is to go from doing the needs analysis directly to the health questions. Okay, so simply all I would do is, after I've asked Jimmy, after I've gone through the needs analysis, I'm going to transition into the health questions. Jimmy, let me ask you guys just a few health questions to identify which program is going to be the best fit, and then I'm going to start asking health questions. If you're new at this and you don't really, you're not that familiar with asking health questions, guys, that's why I say it's important to have the application, have the actual application from a carrier, whether it be Mutual of Omaha, Americo, or American Amicable. Those are kind of like my 3 go-tos for mortgage protection. And then simply just ask the questions verbatim as they're written on the application. Since I've been doing this for a really long time, I kind of like getting the big stuff out of the way. So if I'm working with Jimmy, I'm going to ask the husband and wife, hey, have you guys had any serious health conditions, like any heart issues, stroke, cancer, diabetes, any type of lung disease that requires inhalers or oxygen? Going to wait for an answer. How about in the last 10 years? Have you had any major surgeries or procedures or been hospitalized? Yeah, I had a knee replacement or this, that, the other. Okay. Anything going on with the central nervous system? Any type of central nervous system disease? We don't want to run this. Bipolar, schizophrenia. I'm asking those things. I'm going to ask Jimmy and his wife, have you guys ever had any issues with your like kidney, liver issues or any other major organ issues? No. Have you ever been treated for alcohol or drug abuse? Why is that important? Because on every single mortgage protection application, they ask about it. Final expense, not so much. Final expense apps are a little bit more liberal when it comes to drug and alcohol. What you're going to find on mortgage protection, they're more concerned about not only their health, but also about lifestyle. So they are going to ask about drug or alcohol abuse. They are going to ask about felony convictions or DUIs or, reckless driving. So ask, if you're sitting with a client that has multiple DUIs, you may have to probably sell them an accidental at it may be a final expense product. Then I want to find out, just like we would on final expense, I'm just going to ask the question, hey, Jimmy, what medications are you taking? What are you taking them for? I'm going to go through his list of medications, find everything out. I'm going to ask, are there any medications that you've stopped taking that you were prescribed over the last 5 years? Do you have any medical conditions that we haven't talked about? Do you use any tobacco or nicotine products in the last 12 months? So just do a really good job of doing the field underwriting. What you're going to find is that most of the carriers, American, Amicable, Mutual of Omaha, and Americo, that the underwriting for those three companies, it's very similar. Very similar underwriting. Jimmy, anything to add about doing the health qualifications for mortgage protection?
You might want to just add one other question and ask is if they travel outside of the US and where to, on a frequent basis.
True.
Yeah.
Yeah, that will be. And if you're, like I said, if you're more comfortable just asking the health questions as they're written on the application, you're going to need to do that anyway. But I like getting the big stuff out of the way. That question is usually on the application if it's an issue, if they want to know. All right, transitioning into part 6, the 3-option close, and what I refer to as the program explanation. This is where we're going to sell them on a little bit more about the concept about mortgage protection. The one big thing about mortgage protection, what you don't want to do is get yourself in a trap where it's like an all or nothing situation. Like you got a 65-year-old family, husband and wife, they got a $300,000 mortgage, and you've kind of positioned yourself where they get 300,000 or they can't get anything. In other words, maybe you give them the quote for 300,000, it's just outrageous, they can't afford it. You want to make sure that you do a good job of laying this out. So simply all I'm going to do is when before I transition into the 3-option close, I got my husband and wife. Hey guys, great. I know what you're going to be eligible for now. I'm going to show you the best program that's available, but you got to do me a favor. And here's the situation. Will you guys please promise me is that if what I'm showing you, if it doesn't fit into your budget, promise me that you'll let me know. Because Jimmy and Ruby, wouldn't you agree that at least getting some coverage in place today is better than not getting anything at all? I'm going to get them to buy into that. And then I'm just going to make the comment, at the end of the day, guys, ultimately, you're the one that controls the cost of the program. I'm just here to help you, and I want to help relieve a financial burden. I don't want to create one. The important thing to understand about mortgage protection is that it's about providing your family with a big pile of money so they don't have to make any bad decisions while under financial duress. You see, mortgage protection isn't necessarily about paying the whole house off. It's about making sure that your family has choices and they get to make choices on their timeline, not the mortgage company's timeline. And with our mortgage protection products, is that we're going to name your family as the beneficiary, not the bank. And this is going to provide your family with the freedom of choice and the right to do whatever they want to with the money. Maybe staying in the house is not the right choice. Maybe you guys decide to sell the house, maybe rent for a while, decide what you're going to do. That's why we want to put you in total control. So that's kind of how you want to phrase it and how you want to kind of lay out mortgage protection, so you don't get yourself in a situation where the client's thinking to themselves, well, if I can't afford the whole mortgage, then just forget it. I don't want anything. All right, we're going to transition into 3-option close. One thing that I like to do, I do it on final expense. I also do it on mortgage protection. I always like showing the client the most that they can qualify for under the program. Even if they only have a $100,000 mortgage, if the program allows me to go up to 250 or 300, I'm going to show them 300,000. Okay, because I want to be, because when we get down to option 3, and maybe that's half the mortgage, it's going to look a lot more affordable than if I were to show different choices. The other thing too is that just be careful with your wording. I usually stay away from the word like premiums or, this is what's going to cost you. I say things like, hey, this is what you need to set aside to fund the program, things like that. All right, let's transition. I think I have this up next. All right, I had already pre-filled out a mortgage protection 3-option worksheet. Now, Jimmy, in this particular scenario, you guys have a $150,000 mortgage, okay?
Okay.
So in this situation, guys, I'm laying out the options. I'm going to show option 1. In this particular case, it's going to be 250,000. So Jimmy, option 1 is that I am just required by the company to show you what the maximum benefit allowed under this program. So you are allowed to go all the way up to $250,000. This will cover you for $250,000 of a natural passing. But if you were to pass due to an accident, it's going to pay out $500,000. And this program also includes a terminal illness, chronic and critical. So you don't necessarily have to die for it to pay out. If you were to have a serious illness that prevented you from being able to work or perform the activities of daily living, you can actually get a payout on this program before you pass away. Also, it includes a return of premium. So what that means is that at the end of the term, if you don't die, because then they're not paying a death benefit, or if you, depending on how much of the benefits you use for chronic or critical illness, Jimmy, you're going to get all your money back. So in this situation, in this program, what you would need to set aside on a monthly basis to enroll would be $232.95. And at the end of the 30 years, you guys would get a check back for $81,174. And that benefit, that $81,000, is going to be 100% tax-free. There's no taxes on that. So the great things about these programs, Jimmy, is that this is the type of life insurance that you don't have to die to benefit from. It's going to pay your family if you do pass away. It's going to pay your family if you get sick, and it's going to pay you at the end if you don't get sick or if you don't die.
Nice.
Option 2 is to cover what your current mortgage is. Like you said, you've got a mortgage of $150,000. So God forbid you pass away tomorrow from a heart attack. That's a natural passing. It's going to pay $150,000, which is more than enough is enough to pay the mortgage off. If it were an accident, it's going to pay out 300,000. And again, it includes all the benefits. We also have your children included. Now you've got 3 children under the age of 18. We've got all 3 of your kids included as riders for $10,000 a piece. And in this program, you just need to set aside $141.91. And at the end of the term, Jimmy, you would be eligible to receive almost $50,000 of money back. $49,474. Oh, one thing I forgot to mention, Jimmy, is that I've set this up where you're the primary insured, but I've also included your wife. I got husband and wife. So on this particular scenario, guys, I'm doing the husband with the wife as a spouse rider. Okay, and those are the premiums, and these are actual numbers. So I think I based it on age either like 40 or 45. So this scenario that I'm laying out covers both husband and wife. That's typically the way you want to do it, is if you're working a deal with husband and wife, you want to make sure that what you're showing is covering both of them. And then option 3, Jimmy, this is a very popular option. This covers half of your mortgage. I know you owe 150, but this will cover half your mortgage for natural passing and the full mortgage in the event of an accidental passing. Jimmy, the reason why this program is so popular is because right now you're in really good health. You're 45 years old. You're in perfect health. Based on what you tell me, it sounds like your parents and your grandparents lived a very, very long life. You know, cancer doesn't run into your family. Heart disease isn't prevalent. So it's pretty reasonable to assume, Jimmy, is that if you were to pass away prematurely within the next 10, 15 years, more than likely it's going to be due to an accident, not natural causes. In that case, we've got $150,000 to cover you for the accidental coverage. But later, as you get into your late 50s and 60s, when it's more likely for you to get a life-threatening disease, if you were to pass due to natural causes, $75,000, gosh, your mortgage should be more than halfway paid off by then. $75,000 should be more than enough to cover your mortgage. But this also includes all the additional benefits: the terminal, the chronic, the critical, the child rider. Also includes return of premium. And at the end of the term, which is 30 years, you get a check back for $25,697. And Jimmy, for this program, you would need to set aside $73 a month. But Jimmy and Ruby, you guys tell me which of these works best for you.
Wow. So you're telling me that if I keep this policy to the end of the term and we're still alive, we get all the money back?
You get all the money back. The only exception would be is if you had a chronic illness and you took out a partial payment. Let's say you had something very major going on, and it was classified as chronic or critical illness, and you took $30,000 or $50,000 out of the policy. It would be that would be the exclusion from that.
Wow. So it's like getting free life insurance.
It's like getting free life insurance, absolutely.
Yeah.
But you guys tell me which of these works best for you.
Probably option number 2.
Option 2, okay. And again, who would you want to name as your beneficiary?
My wife.
Okay, all right. So I'm going to transition, and then I'm going to ask, obviously it's going to be the wife, but let's say, you and Ruby were together, something tragic happened, then who would you want the beneficiary to be?
My kids.
Got it, okay. So as you're doing the 3-option close, you're also doing a little bit of selling as well. You're pitching me on the benefits and how it works and how you have it structured. Now, in this particular scenario, Jimmy, I'm going to say, because I have a third option, and that's the name your own price. What if you have the client that says, well, none of these really fit my budget, even the $73 a month doesn't work. Okay. What we need to do here is identify and switch into payment closes. Okay. So I'm going to simply say something like this. Well, Jimmy, I can appreciate that. I'm sure you see value in how the program works. You tell me, what did you expect a program like this to cost?
Oh, I don't know, about $50.
Okay, how about say 60?
Bucks, okay.
That's what I have pre-planned. So I'm going to identify that. I'm also going to find out, well, Jim, let me ask you a question. Is the way I laid this out was I'm showing you the return to premium feature that you get all your money back. That does add a little bit to the cost of the program. Is getting all your money back, is that important to you, or is getting the biggest face amount possible for the lowest premium more important to you?
Yeah, I
So
would say having the higher coverage amount is more important at this time.
than getting the money back. Okay, so I'm going to identify whether or not maybe I should get off the return of premium and switch to something else. So actually had already pre-planned this. Jimmy says he can afford $60 a month comfortably. I put together a program for him and his wife for $60 a month without return of premium. Jimmy, for $60 a month, what I can do is I can get you and your wife both covered for $100,000 of natural death. It'll cover you for $200,000 worth of accidental. We can lock your rate in for 30 solid years, which means is that at $59.27, you never have to worry about the premiums increasing. You tell me, does this work for you?
Yes, that works for us.
Okay, guys, so we locked them in. From here, what we simply want to do is we want to transition and we want to complete the application. We're really almost done with the whole process. Okay. If we get an objection, we're gonna talk about the objection. If they can't afford or they want to think about it, hopefully those are pretty easy objections that we should be able to take care of. And then also with mortgage protection, since they're not on Social Security, usually, I just want to make sure that I'm usually coordinating the monthly premiums with when they get their paycheck, just to make sure that it's coordinated, whether it be in the first of the month or the middle of the month. Just make sure you do a good job of doing that. And we're almost done. Complete the application. Make sure you get all the information in there. You got to make sure that you get the checking information. A lot of times what I will do, even if I'm doing an e-application, if you really want to solidify your deal, go have them grab their checkbook and actually have them make the first premium out. And if we're, as an example, if I'm doing the deal today, and today is it's the 12th, February the 12th. Let's say Jimmy's program's not going to, let's say he doesn't want it to start until March 1st, as an example. I'm going to have Jimmy go ahead and get his checkbook and write me a check for the first monthly premium and post date it for March the 1st. Okay, that's just a really good way of really solidifying your deal. Not necessary, but it's pretty powerful when you're doing this and you get the client to actually do that.
Hey, you know what the other thing that does, Joe?
What's that?
Is it eliminates that awkward moment when you're asking for bank information. You already have it.
Yeah, true. Yeah, I mean, once we get things locked up, hey, Jimmy, do me a favor, go grab your checkbook. I'm just going to have you post date the first premium. Now, we're not actually cashing the check. We're just taking the check, we're writing void on it, and we're going to put that information in the application, and then it's going to be electronically drafted on the date that they selected. But I think it's really good. It's a good idea to collect a check. And then at the end of the sale, once everything's wrapped up and you're kind of relaxing, this is a great time to get your referrals. We're going to use the ERS system to get referrals. We've got great training as far as getting referrals. That's the emergency response system. You can also use the client initial survey to get that. I think I have a copy of that. Here we go. On the left is the ERS form to get referrals. On the right is the client initial satisfactory survey to get more referrals. And then from there, man, you're going to do the cool down, relax a little bit. I like reading them the I am your policy letter. And then before I leave the house, I always like one more time, I like solidifying the deal. Hey guys, listen, I know this is really important to you, and I commend you for taking the initial steps here to make sure that your family's covered. But I need to ask you a really important question, and that is that the check that you just wrote me for $59, before I submit this application to the insurance company, I just want to make sure that this is affordable and it's not taking any food off your table. I'm looking for that last little bit of any type of pushback, okay? Because I'd rather spend an extra 20 minutes there and redoing it for $40 a month versus Jimmy and his wife calling me 2 weeks later saying, hey, we changed our mind, we can't afford it, okay? And that's it, man, we're done. That is, man, I'm sure we took a long time. Oh man, we're right on schedule.
Great job, Joe. You did that perfect.
Oh man, I thought for sure we went over by 10 or 15 minutes, but all right, guys. Well, this wraps it up. I appreciate everybody being on the call. Like I said, we got this recorded. We're gonna get, we've got it all written out for you. So, you can read it, you can study it, you can memorize it. The important thing is just everything that you're learning is that it means nothing if you don't put it into action, and it means nothing if you don't have people to go see, okay? Jimmy, any last words of information or encouragement before we sign off?
Man, you did a great job, Joe. I just say, have a great weekend. You guys go out there and get it.
All right, man. God bless everybody. Take care. Love you guys. Call me if you need me. Adios, Jimmy.
Adios.
All right, man. See ya.